The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 28th terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential is what we must master each and every day. Let's start off today with a thought for the day to carry us off into the weekend, and that's this, folks. One person has enthusiasm for 30 minutes, another for 30 days, but the person who has enthusiasm for 30 years, well, that person will make a success of their life. Live with enthusiasm, folks. Do it today from this point forward. That is a great way to live. Let's go take a look at the enthusiasm in this marketplace here as we come into a shortened trading week, a holiday weekend. Right now, the Dow is up 20 points, trading out at 14,547. Not a lot of enthusiasm in the composite right now. It's down a buck. Not a lot of enthusiasm in the S&P. It's up 27 ticks, and not a lot of enthusiasm in the Russell 2000, down 53 cents. I suspect we'll see this market pretty much trade relatively flat. Light volume trading session as we come into the holiday. You know, we're coming into the end of a quarter, into the end of a month, into the end of a week out here. Just a little bit of everything. And so I suspect that, with the gains that have been out there in the marketplace, be nice for some of these funds to just go ahead and try to book those and keep this market relatively flat out here. Our call-in number is 877-927-6648. As we go peek around the world and the commodity area, right now you've got the DAX is up 22 points, the FTSE's up 37. Both those up, the DAX itself is up about 0.25%, FTSE up 0.5%. Over in Asia last night, down hard. You had the Nikkei trading down about 157 points off a little over 1.25% to be exact. You had the Hang Seng off 165 points. That was 0.75%. And you had the Shanghai off 3%, down 68 points. We have gold trading down $8 right now. That's off 0.5%, out at 15.97. Silver off 10 pennies, down about 0.4%, out at 28.51. Light sweet crude is flat. It's up 13 pennies, trading at 96.71. Our call number again is 877-927-6648. If you're listening on the radio or your mobile device at tfnn.mobi, thanks so much for doing that. Remember, the live stream of this show can be obtained, I think maybe even on your BlackBerry device these days. BlackBerry is trading up about 43 cents after releasing earnings this morning. But you can get that on your smartphone devices. Just go to the homepage of tfnn.com. Over on the right-hand side, you'll see a button with 3 little smartphones. Click on that. This show will stream live to you. And, hey, if you're over on that homepage at tfnn.com and you're not a member of the Den, well, then today is the day to do it. I believe that promotion ends this week. I don't know if that means today, since it's the end of the trading session, but even if it's tomorrow or it's Sunday, why procrastinate? Get over there with some enthusiasm. Sign up. You can test drive that for 30 days. Doesn't even matter if you have test drove that in the past. So go sign up for that before that promo is available. Take advantage of every opportunity that gets presented to you. It gets presented for a reason, folks, and that means you need to jump at it. Let's go take a look here at the S&P 500 as we peek in on that. A couple of folks asked me, hey, was yesterday a hammer candle? And the answer is no, it wasn't. It looked like a hammer, smelled like a hammer, almost more of a hanging man candle, quite frankly, than a hammer out here. Hammers come at lows, not up at highs out here, and certainly the S&P has been trending higher. Right now, trading out at 1563. The swing point high, I believe, let's see, it's 1563.62 on March 15th. We get a little bit higher here. We got 1564 on March 25th, 1564.95. Let's see, did it take out that area yet today? It did, 1565.09. So on its a very slow trek up into the 1576 area. Don't know why it wants to take so long just to get up there. I mean, it's scaled Mount Everest this far. You would think you'd want to go up there and take a look at the peak. You know, I suspect that is what the S&P wants to do, is at least go test the high of that swing point. Again, that number, 1576.09. It certainly has tested the lows a number of times out here and has rejected those lows, but it doesn't have the enthusiasm that it needs to volume-wise or price-wise to get up there and test that level. Let's go take a look at the other indices out here. Let's take a look at the transports. Now, on the transports, it was a hammer candle out here. Why? Because there was enough of a downtrend established coming off of its highs back in March 18th, March 19th. So there was enough of a downtrend channel there in order to be able to create the hammer. That's important to be paying attention to. That is one of the charts. So, you know, normally I give you a few things to be paying attention to watch for signals. The trannies are going to be one you're going to want to be paying attention to, because now it has a hammer low, and that hammer low is 61.1829. If at any point you see a close below 61.1829, it means look out below, and that next below area is going to be where it has its bullish candle formation and swing point. That'll take you all the way down into the level of February 26th, and that is around the 57.89 level. So the transports is one of those charts that you want to be paying attention to, and you want to watch if the transports ever move down below that hammer candle, because that is a hammer candle. When you're long, you're wrong when you see it close below a hammer. And what that means specifically is you will move down to the next support area. Let's continue looking at the indexes, as we do always during the first segment of the Money Masters show. Let's go take a look at the Dow here. Dow Industrials right now trading up about 23 points. As we take a look at the Dow, that has a swing point high here. First, it's got a TD combo count back in March 15th. It's important to watch that high, 14.539. It's trading at 14.549, so 10 points above that right now. The Dow here, though, the summation index inside the Dow ticking down again yesterday. The Dow is showing that it's got some weakness, meaning that it does not have a broad participation while it is up at these highs. Fewer and fewer stocks inside the Dow as the Dow moves higher out there. That is not what you see as markets move higher out here. So it does say there are some caution signs, absolutely. The weighting structure inside the Dow, you got ExxonMobil, which we looked at earlier, and IBM making up a big portion of it. In fact, we'll go peek in on both those stock charts here during the show. But not a lot of movement here in the Dow. I don't expect we'll see a large breakout inside the Dow today. The Russell 2000. Trading out right now at 949. The Russell 2000, if there's going to be a breakout, so if the S&P can actually buoy the market, this is the one that you would like to be over, because when you take a look at the A to B equals CD, it's traveling up above that 1 to 1.272 area, which is right around $935. And if it can break above this, 983 is what would be on its horizon out there. Now, of all of the indexes in the marketplace above the 2007 level, there's only one index, only one, that is got confirmation as it broke above the 2007 level. Do you know which one it is? Of course, I'm probably giving away that little secret. It is the Russell 2000. All the other indexes, as they've gotten above the 2007, the NASDAQ Composite, the Dow, they do not have a volume confirmation as they broke above. But the Russell 2000 most certainly does out there. Something to think about. Let's go take a look at the New York Stock Exchange. New York Stock Exchange only making a 0.786 retracement off of its 2007 highs out there. But all of you know that what the New York Stock Exchange is doing, had a little gap down here that is acting truly as a resistance level. That is something to think about for sure. That we're taking a look at is the low of March 15th. That low, 9,091 and 5 pennies out there. What we can see here, and that's this little red line. We'll go ahead and expand it up on my screen here just so you can take a look at it. We can see that has been tested twice out here. It was tested, and when I'm talking about tested, I'm talking about the low of that March 15th, the low of that window. It was tested on March 20th. It was tested again on March 25th, and it has just a tad higher to run this morning. So far this morning, 9,086 has been the high, 91 is the low of that March 15th level. So you've got a little bit of resistance inside the New York Stock Exchange. These little dots that are on my screen as I blew them up, that's actually the summation index. I don't have yesterday's data. I didn't import yesterday's data out here. But what you can see is that the summation index is pointed down. It's pointed down in the New York Stock Exchange. It's pointed down in the Dow, pointed down in the S&P. It did tick up in the NDX yesterday, but all of those are indications of a market that may be topping here. Let's see, did we leave out any of the indices to take a look at? We got the transports. I guess we got just a little bit of everything out there. Oh, we didn't take a look at the NDX, so let's go do that. Take a look at the NDX. Boy, this thing has been traveling in this .786 Gartley pattern forever. It really firmed that up on March the 5th, so the entire month of March here, and just continuing to travel sideways. Let's go to Altamont Springs to Kim. Kim, thanks for calling. Thanks for holding. How are you today?
I'm okay. How are you doing today, Steve?
I am doing just great, just great. You wanted to take a look at – go ahead.
LNG, churning energy, if you could take a look at a monthly chart and go back to like maybe 2000 and 2007.
2007. Okay, so let's do this. Let me put this up on the screen. Now, are you in the equity or not in it? Tell me what you're doing.
I was looking to get in possibly next week because I'm looking at the week of 11/30/2006. Those 2 months of low candles, 11/30/2006, and the month before that, which would be 10/31/2006. We're trading up into that area right now, and I guess my question for you is, once you trade up into a prior resistance, I know that usually becomes support, but you think that we'll dip down below the resistance of those 2 months before we start going back up again?
Well, let's take a look at it. Let's, what we're taking a look at, so you're using as your resistance point, or is the level from October 31st. Is that what you're using?
Yeah, that's what I'm using.
Yeah, okay. So as we take a look at that, what Kim is looking at, the low on October 31st, 2006 was $24.72 out there, and then you had a nice little bull sash candle, a little rising three set of candles as it made its high back in June of 2007. Now, the area wasn't really tested as a real support area on the way down. You see that candle from March 31st, 2008, how it just really sliced through it? Yeah. One of the things that I look for anything that's going to be support or resistance is an area that at least had been tested prior. And in this case here, it really didn't. But can you stick on for the through the break here?
Sure, not a problem.
Absolutely. We're going to go back out to Kim, take a look at LNG. We're going to, as Tom likes to say, we're going to bisect and dissect it. You too can get in on the action. Give us a call at 877-927-6648. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 31. S&P and composite really kind of flat out here. The S&P's up $1.71. We're going back to Altamont Springs to Ken. We're taking a look at ticker symbol LNG, Cheniere, I don't know if that's how you pronounce it or not, energy out there. We're taking a look at the monthly, the weekly, and the daily charts out here. And the question first posed by Ken is, is it breaking a area of resistance, and, will it pull back there? Right now it's trading out at 28.72. It's made a 0.618 retracement off of its swing point from June of 2007 all the way down to, now this thing here, folks, went from a high of $44.40. That did that back in April of 2006, all the way down to a low of 95 cents. How's that for a haircut out there, Kim?
Quite a bit.
I mean, that is a haircut. So what I was saying here with regard to trying to identify some areas of good support or resistance is that, and you're exactly right, and that is a old support area should become resistance once it has broken through. Likewise, an old resistance area will become support. And what I like to see is really at least 3 tests of that area. To really firm up and confirm that it really is a support or resistance level. And inside the monthly chart, we really don't see that out there. We can use the area that you identified as potentially a resistance, I would have looked at, in other words, when the highs were being made out here in June of 2007, on any pullback, my first target would have been that the swing point should have held at October 31st level of 2006, but it didn't. It got sliced through pretty easily. So I don't really take a look at that as an area of support since it never held. But then what you do is you go down to the shorter time frame. So you go into the weekly time frames out here. And on the weekly time frames, I also don't see anything that held, even for a test of really 1 day out here, because you'd still use that October 13th as the actual week now in 2006. That low was 24.72. And as it really came back through here, it never really tested and bounced up off of that area. So then what I would do is just try to understand, okay, let's kind of forget about the past and see what's going on inside this equity at the moment. And what's going on inside the equity at the moment, it's got this A to B equals CD pattern. Now, it has on the weekly chart, it has a number of bullish candles to be paying attention to. Most notably, when it started the A to B equals CD, it started off with a hammer candle. That was the October 7th, 2011. Nice set of bullish candles out here, because you had the hammer candle, followed up on the next trading session by a bull sash, and then you had a wide-ranging bar out here. So this, with regard to an area of support or resistance on the weekly chart, let's just draw that across the screen. We'll draw a black line. We'll use that, and we'll be able to move it up and down. So when we take a look at here, Kem, is if you look at the week of May 27th, as it gets up to 1281, the week of November the 4th, the week of November the 25th, and even if you move that line down just a tad, you can see how that acted truly as an area of resistance.
I see it.
Okay, so here it forms that hammer at the bottom. It makes an A to B move, so it gets above that level of old resistance, and then just as you pointed out, it came back and it tested that as support. And see how that actually held as support the week of June. Yeah, so June 8th, it comes back, folks. Gets down to a low of 1051 out there. Makes a little doji candle, and really it was the three-candle pattern here, which was the down thrust on June 1st, the week of June 1st, the June 8th candle, and then that June 15th. That created that morning star. That is a real great way to be able to identify that the bulls have defended an old resistance level that now became new support. So that's how you should do the same type of analysis, in my opinion, of being able to identify support and resistance levels. And now what this has actually done is it pulled back to that C point, that support level, and now it's made a 1-to-1 A to B equals CD. And as it crossed the B point, what it did was similar volume, about 23 million shares, 19 million shares. When it crossed the B point, it did it with 24 million shares. So that's enough to have a confirmed A to B equals CD. Now, what you don't know is that going to be a 1-to-1? Is it going to be more than a 1-to-1? Well, in this case here, looks like this equity is headed to at least 30.52. So, that was the area of support. I hope that helps you out.
Yes, it does.
Okay. Are you trying to get into it?
Yeah, I've been looking at it for the last couple of days, thinking it was going to tire out, but it doesn't look like it is at all.
I think that it will. I'm going to go down here real quick for you on the daily chart. On the daily chart, we can see this thing is really overbought, and when this thing has gotten overbought in the past, it has at least pulled back. So what I would do on the daily chart, if you're looking to get into this, is put that RSI up there. It may not get down to the 30 level, but let it actually work off that overbought condition, and then go ahead and pull a trigger. 877-927-6648. Have a great holiday, Kem. Thanks so much for calling.
Okay.
You bet. We'll be right back, folks.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more 4 leverage trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 30, S&P's up 222. How about that? I knew that number 222 would show up. Ganny in front of me did that just for that flash there. NASDAQ up 3 1/4. Russell 2000. Sleepy this morning up 68 pennies. And I want to go back to LNG for Cam and really for each of you out there as well, because there's some great tools. There's some great tools. I like you to use this relative strength, relative weakness indicator, because it will really help you on entering positions and trying to be patient and from a buy standpoint. And it's so important to put together whatever tools it is that you use out there. One of the tools that you want to have as your trigger points are candlesticks, because it's going to give you the sense of the emotion where there's been a shift in change in trend, that allow the market to go ahead and communicate to you. And when you're taking a look at an equity that you're trying to get, it doesn't matter whether it's equity, currency, or what have you. This tool is universal, works on all time frames, works on all instruments out here. And what you're looking for is you're certainly looking for patterns. And if you were a patient inside LNG and you bought when the relative strength indicator was down towards its lows, and when I'm talking lows, I'm really using the 30 and the 70 percent level out here. I'm talking about being down around the 30 level. Now what you're paying attention to is you're watching for, is there a handoff here? If you've seen was there a fumble by the Bears and the Bulls picked up the ball? Because that's really what this is. It's just nothing more. If you start thinking of a stock chart as nothing more than you sitting up in the booth watching the football game and the players on the field, that's really what your role is here. And being the technician, that's what we're doing. That's what they're doing up there. They're, no, I've never been up in the I've never been invited to be up in the box to be that strategist, but it is really all about strategy out here. And the strategy that I want you to be able to use is I want you to be able to buy weak hands out there. And I want you to sell into strong hands. And you're selling into strong hands when you see some type of reversal signals. Now, in the case of LNG, we're going to go back and take a look at it. If you take a look at buying towards the bottom, towards the 30% level here, I'm back here on the stock chart. We're looking at the June 4th level. So you can see Cheniere, LNG, the ticker symbol, also moving with the market, because we know the market made a low in June as well. And then you had this little piercing candle that took place the next day. So here's an area where you most certainly could have bought from. What is also interesting on this stock chart, now, when you're looking to buy, let's say you miss that area and you're looking for another place to be able to get in, you don't always have to wait for it to get down to 30, to that 30 level. What you want to be doing is, you'd like to be buying from as low as you possibly can on the relative weakness, so you're buying weak hands out there, but you're really using these candle signals as your, there's been a change. There's been more than a fumble. There's been back-to-back fumbles. There's been a fumble that you scored, and there was an onside kick. And that's exactly what took place here in Cheniere. If you take a look, it's got an island reversal candle formation that took place back in July of 2012. And an island reversal here, if you take a look at the low of July 20th out there, $13.65. The very next session where there was a gap down, the high was $13.38. So we have a little bit of a gap out here. Then it trades sideways here and it's not actually a hammer candle. It's very close to a hammer candle right back here on July the 25th. Very close to it. Next trading session, though, actually was a little bit of a bullish sign out there, but it was subtle. But the real bullish sign came on July 27th. So if you take a look at July 27th's low, 1350. The high of July 26, 1332. So that created, I'll blow this up on the screen here. It'll be a little bit easier for you to follow along on Tiger TV, and then I'll actually just kind of draw a box around it. But this is your island reversal formation. That is the most bullish. Likewise, at the top, the most bearish candle pattern that you can have. Well, it's not. I won't say it's the single most, because there are different versions of island reversals that you can have out there that are even more bullish or more bearish than this one. But there was a nice little signal right here. That's these candles that I've highlighted in yellow. And if you're listening on the radio or your mobile device, no problem. Just go to the homepage of TFNN.com later today or what have you. You'll be able to see this stock chart. Do it over the weekend, and this will help you to identify what you're looking for, how to be able to put the whole trade together out here. So you have the nice little island reversal. Remember, this show is archived on Channel 10. Now, let's say you didn't catch that area, but you said, Steve has taught me to want to buy weak hands. So when are the next time that you see weak hands out here? Well, the next time you see weak hands, back in the November time frame. Market was pulling down into November 16th. So was Cheniere. I don't know that I've got the name pronounced, but you guys will cut me a little bit of a slack here. And what we can see is that island reversal, nobody's ever come back to pick up the passengers on this island. They're stranded out there. If you just simply take a look at support and resistance out here, if you take a look at its price has moved back into that level. So you could have bought down here most certainly in November. You'd be buying weak hands. Now, what happens with this equity, as you can see, is when it gets up into the overbought condition, so we're coming back after the island reversal area, it gets into a little bit of an overbought condition right back here in the time frame of September of of 2012, you could have, you certainly wait, in this case here, if you just simply waited for it to get down into that 30 level, that was your opportunity to buy on this equity. If we take a look at each time this equity has gotten into a condition of moving up and people wanting to actually chase it, what has happened is this has moved eventually back down into the 30 level. And that's at the point in time in which you want to take a look at being able to take a long position. Right now, we can see that this thing is substantially overbought. There is no reason to go ahead and chase this here. Where will this pull back to if it does pull back? That's a great question out here, and I don't know the answer to that one. I just know that it will eventually pull back, and when this thing comes down into the 30 to 40 level, just start looking for bullish candles out here. As far as bullish reversal candles, are bullish candles out here. It's really the last swing point. The ideal trade on this would be it will eventually pull back into the most recent swing point, which would be February 21st, which would be about $19.64, maybe up to $20.60. But it may not pull all the way back down there. Just try to put that whole set of tools together. So I hope that helps you out in being able to take a look at a stock chart out there. Let's go take a look at the euro. Let's go see what we've got going on over in Euro land here, because that's really what's helping to move the markets. You've got folks starting to take out small amounts of their money over in Cyprus and really around the world. You've got to say, if you knew what you knew now, would you at all want to hold on to euros, or would it be the U.S. dollar, or gold or silver, or something like that? As we go take a look at the euro here right now, it is trading up slightly, but if you, again, just take a look at 30-minute chart, that's what we're looking at here at TFNN. What we're taking a look at, look how that relative strength indicator, in this case here, getting up to the 70 level. Doing it as we came in to that 10:30 session, gets up to a level of 68.35 out there. That's close enough for my line of work, and now really what it's doing is pulling back. So we know where the level of support is inside the euro, and that's going to be down at a price point right now of 127.54. I don't expect that. All of the troops are out supporting the euro, big time out there, especially with everything and now starting to come back online slowly but surely over in Cyprus over there. But we are seeing what the upper threshold is, the upper area of some resistance right now. And on the 30-minute chart, won't be over for another, 42, so another 18 minutes out there, but right now forming a little bearish engulfing candle. So that is on the intraday chart for the euro. Let's go peek in on some of these stocks here that are popping and dropping. One of the things that we don't do, I usually take a look at dollar movers out there. Let's go see if I can find something else to look at. Let me see what I can find out here, though, that's got some type of movement that we would want to look at. So on my screen that I'm looking at here, I've got percentage gainers, percentage losers, and I've got new yearly highs and new yearly lows out here. So let's look at something that's got a new yearly high. SIG is the ticker symbol. I don't know what it is. It doesn't really matter. Let's just simply go take a look at it and see what it is doing. Now, it doesn't mean it's all-time highs. Just means it is at a yearly high in the marketplace. Let's go see it's at a yearly high, if it's got any volume or what is behind this. SIG is the ticker symbol out here. And as we take a look at it, that is truly up over, it looks like all-time highs out here. Let's put this on a weekly or a monthly chart. Put on a weekly chart. So everybody in this equity looks to be having some fun. Let's go take a look at the A to B equals CD pattern that is underway in this equity, coming off of the lows here at about $7.02 back in February of 2009. That's your A point. Your B point you can use July 8th, 2011, and your C point, the low of August 5th, 2011, out at $34.46. Traveling nicely along that C to D formation. Let's go take a look at it. $71.76. It's traded so far. Right now it's at $67.96. This is the weekly chart we're looking at this far. This week it's gotten up to $69.41. Looks like that is where this equity is headed. Had a call. Looks like somebody had dropped the line, wanted to look at Facebook. So let's go take a look at Facebook. Haven't looked at the Facebook chart. Ticker symbol is FB. Yesterday, give me a moment here. Let's go take a look at it. Let's see what kind of patterns are out here. See what Facebook is doing, because certainly it's got some resistance areas that it may be traveling into, maybe some support areas. So yesterday, as we take a look at Facebook, creating a little morning star candle out there, so we can see where there should be an area of support on Facebook. Let's go ahead and get rid of a number of things off of my screen. In fact, let's just clear it out. Let's just start from scratch as we take a look at Facebook. So as we take a look at Facebook, you've got a swing point right down here on December the 28th. That swing point low, we'll draw a line across the screen. We'll take a look at the volume as well. That swing point low is $25.15, 56 million shares down there. Let's take a look at the volume so we can see how price was moving into that swing point. And price, we're looking at a daily chart. So price moving back into that swing point area on lighter volume. Doing it on March 25th, it was 39 million shares, going against 56 million shares. Then you had a little pause candle, a little pause button out there on the following trading session, March the 26th, 26 million shares, even lighter than the visit down on the prior day. And then yesterday, 52 million shares to the upside. This candle formation here, that is a bullish candle formation. That is your morning star configuration out here. So we know where the bulls are hanging out inside Facebook. You also have an area here where it gapped up. So if we take a look at another little level of support out here, we're going to pull that across the screen. We'll go ahead and use red on this one as well, because what we can see, I'm using the bottom of the gap out here. I don't know if it touched the top of the gap. That candle had 123 million shares. So we can see that Facebook had a recent breakout all the way back here, November the 26th, and yesterday as it formed a bullish candle formation, all that was tested on lighter volume against the November 26th level as well, and that gap up and that breakout, as well as the December 28th area. Now what we can take a look at on Facebook as well is we can draw an area of resistance, an old resistance line out here. So now we're going to pull all the way back down into July 27, 2011. This time we're going to go ahead and use a black as the color out here. And we can see how this area was an area that was tested, a resistance area was tested twice, really. Now you could pull that down just a tad, and then that would give us our third test out here. So I think it's fair to say that that old resistance area should become new support. And what we're looking at is Facebook here gaps down on July 27th, does that with 123 million shares. Now remember, when it had the sign of strength to the upside, was also with 123 million shares. But really good support now should be inside Facebook right around this area. So caller, thank you for even calling in, because I'm sure there are folks that are looking to perhaps get in on Facebook. And what you can see is that Facebook should have some really good support here. It's areas that have acted. One, it's an area that acted as a resistance line. Once you get up above it, it becomes an area that, does it hold as support? Now, the price has never really totally moved back there. It's missed it by really just a tad, but really close enough. Right now, today, Facebook is trading down a bit. It's trading off, what's trading out at 25.61. 9 million shares today to the downside, 52 million to the upside. If you're looking to get in on this equity, excuse me, this would probably be a reasonable time frame. Let's take a look, see if this also maybe formed. Let's take a look at some retracements on this. So I'll put up my automatic retracement tool just to see what we have going on. And it looks like maybe this formed also at the same general area, a 0.618 Gartley buy. So we'll go ahead and use the most recent swing point for that down at the lows, November 12th. That price point is 1887. We'll use the high that was out here back in January 28th at 32.51. And the actual 0.618 Gartley buy also completed yesterday as well. So there's your thorough analysis of Facebook. Don't use it. Don't care to use it. We'll never use it. That's just a personal thing, but maybe a good entry on the stock. 877-927-6648. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 38, S&P up $2.60, trading out at $15.65 right now. And let's go back to Facebook one more time. You know, one of the indicators that I didn't put on the stock chart as we were looking at it was that relative strength, relative weakness indicator. And voila, put it up. And take a look at this as it was forming these lows here over the last couple of days, down at that 30 level. In fact, made a 29.92 mark on March the 25th out here. So you got just a little bit of everything that says, okay, now would be a time when you could dip your toe in the water here. Now, what you'd be looking for, certainly that IPO date, that sticks out. You got a lot of volume up there. And at some point in time, this equity should get back to that level. You're looking at the low of $38, the high of $45. Now, the ultimate outcome, let's just assume that for this matter here, because we're just really planning a potential trade here, the ultimate outcome of a Gartley, of any Gartley pattern, whether it's a Gartley buy or Gartley sell, is that it turns into an A to B equals CD up. In fact, the D point, which is what it really created here yesterday, the D point on this really becomes, this was A to B equals CD down on your A to B equals CD down of your Gartley, that it really becomes now, because this is a Gartley buy pattern, it really becomes your C point of an A to B equals CD up. So as we take a look at that, we'll draw that. I'm going to go ahead and get rid of the Gartley pattern because I don't want to totally confuse everything that's on the screen here. And so let's do that. Let's draw the A to B, potential A to B equals CD. We can use the same swing point, November the 12th. 1887 is your A. Your B point's going to be the swing point high of January 28th. And now the C point is going to be the low of yesterday, March 27th, $24.72. A 1-to-1 A to B equals CD, which is, your ultimate outcome of any type of Gartley pattern, takes you up to $38.34. $38.34. That's right down to the low of $38 on May the 18th. That high volume candle out there from the original IPO date. Now, it can do more than a 1-to-1, but that would be, in essence, your initial target. Your first couple of targets on this, assume that the equity does decide to move higher. It's going to be the recent set of swing points out here from the March 8th, March 7th, March 11th time frame. That's in the area of about $28. That'll be your first area. Your next area of supports or resistance will probably be this little gap down. Well, actually, that's really about the same area here. Then your next set would be the swing point on January 28th, which has 59 million shares up there. And to the downside, yesterday, the day to the downside was about 26 million on March 26th. Yesterday it moved higher with 52 million shares out there. So that's a trade setup. If you have not used my position size tool, go over to the homepage at tfnn.com. Over on the left-hand side, you'll see a little up arrow and down arrow. Click on that. Comes with a video. We'll go ahead and I've already got the numbers fit in here, but in essence, you go ahead and put your instrument type right up in this box here. You hit the search button. It'll go ahead and call up the what the equity is. Gives you the opportunity here to just simply a pull-down window to identify whether it's a stock, a index ETF, or a sub-index. Sub-index would be like a sector, the XLF, XLE, something like that. And then whether you're going long or short, and then just simply put in your free trading capital. The risk that I recommend you take on any one trade, no more than 1% out there. And then where's your entry point? In this case here, it was trading about 25.66. Now I put the high of that swing point at 45. I think it was around $38. We'll go ahead and put the $38 in there. I'll hit the calculate button. And what this tells us here is that really you only need to risk 0.5%, because by risking 1%, you'd have 21% of your capital. You only need 10% of your capital on any one equity. Could be setting up about a 10-to-1 reward to risk. One of the best reward to risk ratios. He's coming up next. That's Basil Chapman. Stay tuned for Basil, folks. Have a great weekend. I look forward to seeing you on Monday. Take care. Bye-bye now.